Good morning, friends. This is Manoj here once again from Market Ideas of Profit, and today is the 2nd of August. This is the Saturday. The week of August has gone by, week of July has gone by. We are beginning to get into the month of August. And I have been giving back-to-back analysis to you on a weekly basis for the Nifty and the Bank Nifty. Go through all those four videos, and all the levels that we have marked have come precisely to where we indicated that they would. And that's I'm very glad to tell you that the analysis that I've been doing has been giving me great trades. It's giving me the right bias on what I should be doing with my stock transactions on the short term as well as on the long term. And it's been working really well. But what is important is we can't depend on what's happened because that's done, dusted, and gone. We need to look forward as to what is happening in the markets. We are having a back-to-back 5 weeks of red candles on the Nifty. The Bank Nifty has been a little resilient, but off late in the last week, it also has given way. There's a lot of things happening in the world. The geopolitics is really very volatile right now, and Trump is causing a lot of disruption in our markets too. So, without saying much, I would like to take you to the charts and show you what we should expect in the coming days. Now, this is not a video because we are at the end of the month of July and beginning to go towards August. So, this is not a video which will be restricted just to next week. I would like to give you a little reflection as to what we should expect in probably the month of August, to be very fair. So we'll start with the higher time frames and try and see what is happening and where are we leading to. So you can have a bias towards what you should be expecting on the markets in the shorter term. And we will also boil down to the lower time frames to tell us what's happening at the lower end of the market and what we can expect in the week that is going to come. So we're going to get most of the perspectives that we need. We will look at it and see how it goes. So stick to the end of the video because I'm going to share a lot of things that can help you in your trading. I will advise you to look till the end of the video. If you haven't subscribed to the channel, do so. The track record has been really good. We've been getting great results. And going forward, I'm very confident that I'll be giving you the right cues and the right bias that you need to have to get into the markets. Remember this. There is a disclaimer. All that I'm presenting here is for educational purposes only. If you need to trade, if you need to transact, please consult your personal advisor, financial advisor, and take trading decisions based on the advice that he gives you. Having said that, let me get you to the charts and show you what we should be expecting. So this is the Nifty futures chart. Now what I've done a little bit of analysis because that's something that I do on a regular basis. And what I use is mainly the fib replacement, the fib retracement tool. And I also use a few imbalance tools like the fair value gaps. And I also use volume profile in my analysis. So what we have here is that we calculated the last swing and the last swing high, the last swing, the major swing highs and swing lows. We've drawn a fib replacement tool. So this is what the fib replacement tool tells me. We've gone back 50%. And normally, if you stay above the 50%, that's the time when you think that you will be able to target the higher range and get into tracking towards the swing high, which is the all-time high on our markets and which was tracking at about 27,869. That's the all-time high on the futures. Now, this level of 50% was at 25,089. We struggled around this level to go up a number of times. We tried to go higher, but since then we've been pushed down again. And we are now in that area below the 50% level. That's a little ominous. Now, what we can do is we can seek some kind of a support around this level. Between these two levels, that is 24,263 on the futures chart and 24,489. These are the two levels that are significant. If we break these levels, then we could be heading lower, which could then take us down all the way to 22,250. Now, this is an alarming projection that I'm making, but this is what the charts tell me. The moment the price goes below the 50% level, it comes into that golden zone between the 50 and 60% level. And if it doesn't stay there, starts to trend lower, there's every possibility that we could track down to the last swing lows. Now, the last swing lows, there could be two levels that we could track down to. The last two levels that we could track down to are 22,753 and 22,262. Now, remember, these are futures levels. You need to coordinate these levels with your spot charts. I work on the futures levels because I trade on them, and that's what makes it very easy for me, and I don't need to correlate them with the spot chart where I cannot trade. So when I trade Nifty, I always look at the futures levels because that is an instrument that I trade actively on a daily basis in my intraday trades, as well as I do take short-term calls on Nifty and Bank Nifty too. So this is as far as the Nifty goes. Now let's look at the Bank Nifty. I have not done any analysis. I'm going to remove all the analysis that I have on the instrument, and I'm going to track the weekly chart. And what we see on the weekly chart is that the last swing high and swing low, significant swing high and swing low, could have been this level. We are obviously above the 50% level, which was here, right? And then we are also above the 100% level that was created at this point. So these two tell me that we are relatively stronger on the Bank Nifty. Now, to make a little more assessment, I'll capture the new swing high and the latest swing low on the weekly chart, and that tells us that we are at the 50% fib level as far as the Nifty chart goes on the weekly. I'm going to mark this as the 50% level, and I'm also going to give it a price tag. So we are at 55,483 is what we expect. Now here we can expect some kind of support. What are we going to look at? We're going to look at our daily and see where are we going to find support. So there's a good support that we can find somewhere around this level, which is something that we can get because the Nifty is a little weak. That tells me that we could be getting this level 55,119. We breach that, and that would take us lower. So I think that is a level to track. And then the next level to track is this breakout level that we had on the weekly. So this will be 54,482.90. So in the event that the Nifty travels down right up to the bottom of around 23,000, we could track this down lower and get lower to around these levels. These are the levels that you should be marking on your charts. The moment we come below this level of 50% fib, this is one level that we can see a bounce from. If we don't see a bounce here, then I'm afraid we could be heading to 53,470. That's the scenario on the Bank Nifty as far as what I see on the charts. I also check these imbalances, and I don't see a lot of support here. This particular imbalance has been already consumed. This imbalance is consumed to a very large extent. Now, to give you a little more perspective, I could actually use my volume profile tool to tell me what is the possibility here. And I don't see a lot of possibility here, but I see some kind of resistance here, support here, sorry. And this could be something that we could look at. So this is roughly about, what level is this? This is roughly about, let's say, 55,342. Now that's the level that we could hope to, use something as support. But I mean, I'm not sure how this is going to work out, but I think we are going lower, and we could be tracking these lower levels. We could also have one more level which we can look at, and which is the value area low on this profile, which is a level which will mark out as 54,772. So these are the less significant areas on the dashed line, dotted line. These are the ones, the blue lines, the dark blue lines are the ones that are the significant levels to track. These can give you intraday bounces, and these can give you daily bounces. So these levels are the significant levels on the Bank Nifty. We are definitely looking to head lower. If we don't take support at 55,483 and bounce from here, we could be going lower. If we take a support at 55,483, let's look at that scenario. And then we could go right up to this level first, which could then be something that we can take as a pullback, rally right up to this level, which is roughly about 56,270. This particular resistance has been slightly tagged, and there was a sharp reaction down. So I still think this is going to be something that is going to push the prices down. In case we don't take resistance here, the next resistance level is 56,600. So if we bounce from here, that is, if we bounce from this area and go back higher, these could be our two targets, right? I will mark this as blue, right? And on the way down, we could look to go down here, take some kind of a move, which is, some kind of retracement moves. And this could be the trajectory that we could be heading to in case we fall. Now, obviously, looking at what's happening in the markets, the turmoil, we could be doing any of these. The Bank Nifty, remember, is the better of the two indices. Let's see what is the trajectory in the Nifty. So in the Nifty, we definitely I am looking at these two levels, and we could be tracking. Let us look at the daily and see what are the levels we're looking at. As I saw in the Bank Nifty, so we definitely are below the 50% level. We're going lower. Yeah, I think this is a level that we will get. Now, why do I say that? Let's analyze why do I say that. See, what happens is, again, I'm going to use my fib replacement tool. These are the two significant levels that we need to mark for the fib replacement on our daily cycle. Now, just see how beautifully the 50% fibs is 50% fib of the previous cycle and the 50% fib of the current price leg are both coinciding at this level, which is the 25,061, and we've taken out 25,061. We're going lower, so definitely 24,263 looks very much on the cards. I don't see any significant support on the Nifty in this area. So I can, with a lot of conviction, say that we have a fall of roughly about 400 points coming our way. So I'm going to mark the current level that we are at, right? This is the current level that we are at, and the current level is 24,608. We definitely are heading for this. Now, there are two ways we can head out to this. We can either just keep dropping and, take some kind of a route here and then get to this level and then probably end at somewhere around this line, because this is where the support comes in. So I'm going to mark the support for you. This is where a small tap can then take us higher. This is the level that we can tag to see the bounce from 24,166. I've been saying this consistently in my weekly analysis. This is the level that I'm looking at. 24,166 is the level that is coming out to me. And let me be a little more precise on this one. Yep, 24,168, 66 is the one that I'm getting. This could be one trajectory. The second trajectory that we could see is that we could see a small bounce, which can take us higher and then bring us down again to these levels. So these are the two scenarios that I think are building up on the Nifty as on the daily chart, 4-hour chart actually. And I've already indicated to you what I'm expecting on the Bank Nifty. Guys, this is what I expect. Without making the video too long, I would like to tell you that, yeah, this analysis comes from my reading of the charts and the tools that I use. The RSI on the daily also is suggesting that we have some more way down. It is close to about, it's close. So it can go a little more lower in the discount areas. And I feel that we have some more area to go down before we can again begin to track up. This is obviously a blip in the long-term prospects of the chart. We will go higher eventually, but yeah, this is a good correction to get into good stocks at the time that we reach down to about 23, 24,000 and start nibbling there. Now, if it becomes really worse, we could go down to 22,700 also in this leg down. So let's keep that in our mind and be aware of what can happen and not be overtly sold to the India story. Yes, we are in a long-term bull run, but there's always a correction in the bull run too. I'm not using any other indicators. I'm not using the moving averages in this particular analysis. We can add more confluence to this analysis by using whatever tool you use to get your levels. But this entire bouquet of analysis that I do with the tools that I have, the bouquet of tools I have, gives me very precise levels. And I don't like to add more tools, because the more tools you have, the more variances in your reading goes, because every tool will give its own variance. Sometimes the confluence helps, but I have begun to depend on these tools, and because they consistently give me the results that they give me, I stick to these because they work for me. Now, there's a program that I have to help people read charts. I basically help people how to read charts. So if you want to be a part of any such program where you have some challenges, or you want to refine your entire your learning right now, and you want to read your charts better, I have a program. I have a one-to-one teaching plan where I come to you on an hourly basis. We have about 10 hours, and I can teach you everything that I know and make your chart reading, give you that extra edge which can help you make money for the rest of your life. And yes, I do have two community channels, where one I release intraday trades, where I release swing trades. They are currently on a free plan because they are for educational purposes only. And the entire community is to encourage people to learn how to read their charts if they're trading, and not just to go in the market and trade on whims and fancies. Informed decisions will always give you better outcomes. That's the learning that you should be taking if you are dabbling in the markets. With that, I'll close this video. I hope my analysis helps you and makes you profitable. I look forward to a profitable you when I meet you the next time. Thank you, and thanks for being with me on this analysis. Last one bit, please like and share the video, as it helps me to get to more people. I put in a lot of effort to get you these videos. All I expect is a little love, and share it with people who you think trade in the markets and you discuss your market experience with. And if they can be helped with my analysis, you should do your good deed today and recommend them to my channel. Send in a referral and link them to my channel, and I would love to be helpful to as many people as I can touch. Thanks a lot, guys. Have a great weekend. See you on the trading day on Monday. Thanks. Bye-bye.